One of the biggest problems of many forex traders is inability to understand how to read the market, how to read price actions. And for you to understand this, you must understand the concept of candlesticks. So in this video, I'm going to explain everything about candlesticks from basic level to advanced level and show you with examples how to identify this in a chart and how to use it. Okay, so once you understand this concept, I promise you your life and your journey as a trader will become easier and clearer. So if this is your first time of seeing my channel, please like, subscribe and share this video to reach other people. So let's dive into it and I'll show you everything as it is. So let's first understand the meaning of candlestick. Candlestick simply means a visual representation of price movement at a specific time in the market. And every candle that you see in your chart has four major important parts: the opening price, the closing price, the high price, and the low price. And this is exactly how it looks like in a diagram. At this particular diagram, you will notice that everything that I told you are represented here: the opening price, the closing price, the high, and the low of the candle. But there is one thing that you need to know about candles. Every candle is divided into two major parts. The first one is the body of the candle, which is this thick part of the candle, and the second one is the wick of the candle, which is this tiny part of the candle. The wick is also called the shadow. All right, but looking at these two diagrams that you can see here, these two candles, you see that this one is red, okay, and this one is green. Okay, this particular one that is red represents the bearish candle. Okay, it represents the sellers in the market, and this one that is green represents the bullish candle, okay, representing the buyers in the market. Because in the market we have only two major kinds of people: the people that are selling and the people that are buying. Okay, so let's start with this one called the bearish candle and kind of describe how it is being formed. So when the market opens here, okay, the market moves up and then move down to this particular low and then finally close at this particular point. This shows that the sellers are very strong in the market. They have enough strength, more than the buyers. That's why they were able to push the market below the opening price and then close here. Then looking at this second one, the market opened here and then moved down a bit, then reverses and go up to this point and close at this particular point. Okay, this means that the buyers are stronger than the sellers. So that is why the market was able to open here and then finally close above the opening price. So candle play a very serious role in the forex market when analyzing the chart. So it is always good to look at how the candles are being formed and how they are being closed. Okay, the body of the candle play its role, and the wick of the candle also play its role when it comes to forex trading, and we are going to discuss more on that. Why is understanding how to read candlesticks very important? It is very important because this will help you to understand market psychology. You understand? You will understand what traders are doing at any moment in the market. You understand fear of traders, you understand momentum of the market, you understand the psychology of different traders, okay? You understand decisions that different traders are taking at any moment in the market. Okay, also this will prevent you from just guessing the market and reading the market instead. This will change your life entirely as a trader. So when you read candles in a chart, you will understand that they appear in different patterns, and these patterns signifies a lot of things in the market, and they give different kinds of information to traders about what is actually going on at that particular moment in the market. So your ability to understand these patterns will change your mindset and your understanding about price movement and understanding price actions. So I'm going to show you the most important patterns that you can use and start applying today, and you begin to make profit, and your understanding of charts will change entirely. So let's get down to it. I will show you some pictures of these and how to use them. So looking at this particular diagram, you can see different candlestick patterns. All right, these are the most important candlestick patterns we have: the bearish engulfing, the bearish tweezers, the bullish engulfing, the bearish tweezers, the dojis, the evening star, hammer, inverted hammer, morning star, shooting star, spinning stops, the three black cross, the three inside down, three inside up, and three white soldiers. I'm going to explain what these candlestick patterns mean, okay, and how to use them. First one is bearish engulfing. Looking at these two candles here, you can see that this one is small, okay, and this bearish candle is larger than it. And also looking at it, you can see that this bullish candle is being covered by this bearish candle. The body of this candle is covered by this particular candle, all part of it. So this shows that the sellers are becoming stronger in the market. So normally it appears when the market is in an uptrend and at a particular point where you expect the market to reverse, and then a small bullish candle like this occurs and a large bearish candle occurs to cover it, then it means that the strength of the buyers is becoming weak and the strength of the sellers is overtaking it, and the market is about to change direction. Second one, the bearish tweezers. Okay? Looking at these two candles, you can see that they have two equal parts, okay? And then looking at this particular point, the same thing. So this usually occur when the market is in an uptrend, and then two candles like this occur. Looking at this, it means that the buyers, okay, is getting weak. That's why the candle moved up and was not able to continue going up. It closed like this, producing a long wick and a small body. And then the next candle opened here, produced a long wick. The buyers wanted to continue going up, but they weren't able to continue moving up, and then it closed with a small bearish body. This shows you that the buyers are now very weak. These two weak parts, long weak parts, shows you that the buyers are now becoming weak and the sellers are about to take over the market. It's about to reverse. Then the next one is bullish engulfing. When the market is trending downwards, as the market is going down, and then a short bearish candle occurs in this form, and then a long bullish candle forms to cover all parts of it. It means that the sellers are becoming weak and the buyers are now gaining more strength than them in the market. So if this appears at a key point in the market, it shows that there will be a reversal in the market and you should be looking for a buying opportunity, okay? Because the buyers are becoming stronger than the sellers. Then when we have the bullish tweezers, it means when the market is trending downwards and then this particular pattern appear. Looking at this, it means that the sellers are selling, but creating this particular long wick shows that the market opened here and it continued going down up to this particular point, but the sellers couldn't hold the strength of the buyers. That's why it drew back to this particular point, creating a small body, okay, with a long wick. Then the market opened again here. The sellers tried to push the market down again, but they couldn't. And then the market produced a bullish candle with a small body like this. This shows you that the buyers are gaining more strength in the market more than the sellers, and the market is about to reverse. You understand? More especially when it occurs at a key point in a downtrend. And this is dojis. Okay, dojis have different meanings. We are going to talk more about it, but mostly it shows indecision in the market. Okay, or show that let's say in this particular form, it shows that the sellers are becoming very weak. Okay, and if it shows in this form, it shows that the buyers are becoming very weak. Then looking at this particular one, the evening stars. Okay, here the market is in an uptrend, and then this bullish candle occurs. Then all of a sudden a doji appear. This doji here shows that there is an indecision in the market and the buyers are becoming very weak. And all of a sudden this particular bearish candle occurs. This bearish candle that occurs like this is telling you that the buyers are becoming weak in the market and the sellers is about to take charge. Then you should be looking for a selling opportunity. Then when we talk about hammers, look at this particular candle. It looks like hammer. So in a downtrend, okay, in a downtrend, if this particular candle pattern occurs, look at this. It means that the market opened here, and then sellers wanted to continue selling the market, but they become weak because the buyers are coming more into the market, pushing the market to produce something, a small candle like this, a small candle, a small body of this form with a small wick. And this shows that the strength of the buyers is becoming more than the strength of the sellers. The market is about to reverse to go up. The same thing if it appears like this, if it closes a bearish body, it's still the same thing because the sellers wanted to continue pushing the market down, but the strength of the buyers is more than the strength of the sellers. That's why it closed with a small body. Okay, it's trying to tell you that the market is about to reverse and you should be looking for buying opportunity. This is mostly when it is in a downtrend. Then when we have something like this is inverted hammer. Okay, also in a downtrend, it's still telling you the same story. Okay, that the market is about to reverse to continue going up. Then when we talk about morning stars occur when the market is in a downtrend and at a particular point where you expect the market to reverse and change direction. If you look at this is this big bearish candle, okay? And then after that there is a doji that occurred showing an indecision in the market. The sellers and the buyers are struggling. Who will take control of the chart? Who will take control of the market? And then a bullish candle of this form occurs. This shows you that the buyers are trying to take control of the market and you should be looking for buying opportunity because the market is about to reverse. Then this is a shooting star. Shooting star occurs when the market is in an uptrend and at a point where the market is about to reverse to go down, the market is about to change direction. Look at this. This is a bullish candle. Okay? The buyers are pushing the market. They push the market up to this point, but the strength of the sellers in the market pushed it down and made it to produce a small body of the candle. This shows you that the buyers are getting weak in the market and the sellers are coming in more in the market, trying to change the direction of the market to selling direction. The same thing if it is in a bearish form of this form, it still means the same thing because the market opened here, okay, and tried to move up. The market opened here, and tried to move up. Then the sellers are coming in more in the market, stronger than the buyers. So that's why the market was not able to continue going up and it decided to close with a small body in this form, the bearish form. So it's trying to tell you that the market is about to reverse to go down. It mostly happens when the market is in an uptrend. You need to take note of that. Then the next one is spinning top. If you look at these two candles, you can see that everything is equal. this top is equal, this particular point is equal, and these two bodies of the candle are equal. Okay? It's showing you that there is an indecision in the market, okay? And the market is about to reverse. It depends on where it appears. If it is downtrend or uptrend, it will tell you whether to change direction going down or whether it will change direction going up. Then, looking at these three black curves, it normally appears when the market is in an uptrend, when the market is going up in this form. And then, at a point where you expect the market to go down, at a key point, at a key level in the market, three candles like this appear. Look at how the candles appeared, because it is very important. The first one appeared in this form and closed. It opened here and closed at this particular point. Then the next one opened here. The body of the candle didn't enter into the body of this particular one. It opened at exactly where this one closed, just a wick inside this particular candle, and then it goes down to this point and close. Then the next one opens at the same point where it closed with a small wick inside it, and then it goes down in this form. When something like this happens, just expect that the market is about to reverse and go down. Then looking at three inside down, when the market is in an uptrend, the market is trending, and at a particular key level in the market where you expect the market to reverse, a big bullish candle of this form, of this kind of forms. Then after that, a bearish candle occurs. Look at this. Look at the bodies of these two candles. As you can see, they are equal. Okay? Look at the wick also, they are equal. Then after that, another bearish candle open at the same level where this particular one closed, with this wick dipping down into this particular one, and then this second bearish candle that occur closes below this bullish candle. You need to be very careful when reading these candle patterns. It closes below this bullish candle. It means that the market is about to reverse, and you should be looking for selling opportunities. Then, if the market is in downtrend, then a long bearish candle of this kind occurs. Okay, and then a bullish candle like this also appears. Then look at these bodies. Look at these two bodies. They are equal, with the wick equal. And then the second bullish candle opens just right above the closing of this particular one. The wick deep inside it a little bit, and then the body closes above the body of this long bearish candle, the last bearish candle. Then it shows you that the market is about to reverse, and that the buyers are gaining more strength in the market more than the sellers. So at this particular point, you should be looking for buying opportunities. And the last one, which is three white soldiers, if you look at this particular pattern, it is just exactly opposite of these three black cross. Okay? It's trying to tell you just the same pattern that this one appears. It's trying to tell you that the market is about to reverse. Look at the bodies, the opening and closing of these candles. So this one opened here, closed at this particular point. The next one opened just right above it, okay, with this wick dipping a bit here, then close above it. The next one just opened right above where it's closed, and then it's the same wick, and another one closing above it. This shows you that the buyers are gaining more momentum in the market, and you should be looking for buying opportunities. So all these candle patterns help you to read what is going on in the market and what the buyers and the sellers are doing in the market. But you should be very careful where these candlesticks patterns appear, because it can appear anywhere in the market. So you need to join it with other patterns. You need to join it with other trading strategies. All right. Okay. Understanding how to use these candlesticks and how to trade with them is very important. You don't just jump into markets because you saw these candlesticks or these patterns in different points. in your chart, because they can appear at any point in your chart. So there are significant levels in the market where you're supposed to use these candlesticks patterns. These are the best ways to use it. You need to understand the market structure. You need to understand your support and resistance levels. You need to understand the market trend, and also you need to understand the current state of the market before you use these candlestick patterns. These are significant places where you use these candlestick patterns, and it will be of use to you. All right, so in our next lesson, I'm going to discuss more on how to identify these candlestick patterns in rechart, okay, and the key levels where it is very important to use them. So stay tuned in the next video and follow this channel so that you get the next video and see how to use them in rechart. So if you really found this video really helpful, please like and subscribe to this channel to help us grow. Thank you, and see you in the next one.